All right, so let's start this PAI tutorial. Now, originally, PAI was tutorial was scheduled 2 weeks from now, but of course, we know that there is a urgent need for a tutorial this week because of what market is doing. So that's why we try our best to accommodate. Now, first of all, if you have your mic on, please kindly mute it for now, and unless you start to speak or ask questions, and I'll try to uh, ask you to, if you have a question, try to leave it until the end, because I do have a few slides that I want to go through. And so make sure that like if you have a question, write it down first, and then we'll go through like a little Q&A session one by one. Okay, but we'll go through a short PowerPoint slide presentation first. Just like as usual, before we get into like this kind of thing, I want to let you know that I'm here to share my experience. Okay, there's no guarantee of success. Any investment and trading strategy will involve risk. Okay, now, ladies and gentlemen, we are truly at war right now. Okay, and of course, this is more like a economics war. It's not the physical war, but it is a financial war that we are facing right now, literally. And first, breathe. It's okay. Breathe. And we'll go through a lot of what we could do to play defense today, but just breathe. Okay, everyone, just follow me. Let's do some breathing exercise for now. Okay, so let's close your eyes and breathe in with your nose. And when you breathe in, your tummy should actually stick out, and then breathe out from your mouth. All right. So 1, 2, 3. Breathe in and out. One more time. Breathe in and out. One more time. Breathe in and out. I don't know if that makes you feel better, but keep doing this exercise. You will need it. Okay, let me set some expectation. Okay, I do not have a crystal ball. So do not ask me any questions like, where's the market heading? Is it going up, down? Will it drop another 1,000 points? Or when will it come back, etc.? Because I truly don't know. Okay, your guess is just as good as mine. So no need to ask me crystal ball questions. I don't know the future. And we don't even need to talk to this person right now. We don't need to talk about it. Guess what? Because we have no control. He will do his thing anyways. So we don't need to discuss what he's doing or how is the world is reacting, because as I said, we have absolutely no control. But what we could do though is we could manage a couple things. First thing we could manage is our emotion. Right? Breathing is one of those. However, I'm not a therapy, so I don't know how to teach you how to manage your emotion. But more what we want to focus today is how to manage the margin. I think that's more important. With this strategy, the most important thing is manage your margin. And that's what we're going to talk about today. Now, originally, I planned to do a online poll survey to like click out like launch a survey poll on Zoom. For some reason, we couldn't do it. That was the technical difficulties. We well, before you log in, we were trying to actually set that up. Somehow it doesn't do it. Now, the survey poll that I wanted to ask was like, where you at right now in terms of your margin level? I mean, if you don't mind, you could put your margin level in the chat box. If you don't mind, everyone sees it. Like whether, yeah, I see that. Okay, Kim says 254. Thank you. I mean, it's up to you. It's voluntary. You don't have to if you don't feel comfortable putting your margin level. Wow. Okay. All right. Okay. Thank you for all the inputs, and thank you for the transparency. Okay. Karina, 89. All right. Okay. Wow. All right. And thank you so much for all the inputs. Now we'll get to the margin level later on. Okay. But now I have some kind of idea where everyone is at the moment. Remember this. When you first like watch the PAI presentation, I talk about this. Why 95% of the people lose money on the markets? Basically, it's greed, fear, and lack of discipline. And some of you started trading with the strategy, and sometimes greed comes in, right? Because it felt just too easy to make money. Oh, TP, TP, TP like that. And maybe you get greedy at some point that, oh, okay, maybe I can increase the contract size, make a little bit more without adding extra funds into it, without adding extra capital. So you're not playing with the correct ratio. For example, my ratio always shows it's 100K US, you do 0.05. If you have 20K US, you do 0.01 in MT4. So maybe some of you over the last year or so, maybe you could get greedy or fear. And because as soon as you see market start to come down and you don't know what to do and you start to do like maybe close out some position yourself without having the plan. For example, adding more funds to it or pause the trading, whatever that may be. So, think about if you are actually in one of those situations, one of these three situations. And I was actually going to do another survey poll about that. Like, so far, have you been following strictly all the rule set for the 100-point strategy? Or did you really greed, there's greed comes in, or maybe fear comes in? And if you don't mind, yes, put it in the chat as well. Did you have the right reserve funds? The 1 to 3 reserve funds. And so, and thanks for, the honesty in the chat. Yes, 50-50. Whatever the situation might be, okay? Now we'll try to see what kind of options we have right now for what we are facing, okay? So let's focus on how we manage the margin, because this is the theme for today. We talk about playing defense, because now is not the time about offense, trying to get all those TPs. No, now is the time for playing defense. That is very important. Now, and if you have gone through the 90 minutes presentation for the PAI, you probably have seen this. Okay, I said leave 80% of your capital for defense. Even if you have 100K to invest, start trading with 20K first, and then the 80% is for defense. So that essentially is a 1-to-4 ratio. Okay, 1-to-3 ratio still kind of okay. If you have like 1-to-2, 1-to-1, definitely very, very risky. Okay, but right at the beginning, at the very first day when you were introduced to PAI, I already said that, leave 80% of your capital. That's a 1:4 ratio. But if you have 1:3, yeah, still okay. 1:2 is getting very, very risky. 1:1 is definitely risky. So let's talk about this, the margin call situation. Okay. Now, earlier, some of you have already shown, what's your margin level right now. Most of you are above 100, above 100. If you hit the 100% level, that's the margin call. And if you don't do anything, basically you have 7 days to get the margin level above 100%. And if you don't do anything, CMC could liquidate you, meaning that they could close out your position and then you will realize a significant loss. Or during that margin call time, even you have that 7 days. However, if the market continue to drop very quickly, that your margin level hit 50%, that's an instant liquidation. There's no more 7 days anymore because the margin just dropped too quickly. So at 50% level, that's an instant liquidation. Like, we have to try our best not to hit that. That's the goal. Do not hit that 50%. Otherwise, you do realize a significant loss. Now, when you were going through the course, we have a similar table like this, that if you start with 100K, now, for those who have been trading live for more than 2 months, and if you're following the strategy, chances are right now, your highest holding contract on NASDAQ probably valued at 22,155. We are all on the same boat if you have been trading for more than 2 months, because that was the record high, that we have an open contract of 22,155. And let's say if for me, 100K trading 0.05, and that 100K, assuming that every 100 points it goes down, I open another same contract size, 0.05, and I can sustain a 2,900 points drop. Okay, that's basically from the margin calculator, and you could double check that, verify that from the Excel spreadsheet that is included from the course or the online calculator. Same thing. So I basically extract that data, put it into this table right now. So okay, if I have 100K, I can sustain 2,900 points. That's a 13% market drop, assuming that you keep opening at every 100 points, opening one contract. Now, if you get to that stage and add your first reserve funds, in this case, I add the first batch of 100K into it. That could help me sustain another up to total 4,800 points drop. That's a 22% market drop. And basically, your margin level will hit 100% when NASDAQ hit 17,355. And of course, we are already below that mark right now, because NASDAQ right now is at 16,750, which means you may have to add your second batch of reserve funds in this case. So now, with the second batch of the reserve funds, I could theoretically sustain another certain points drop up to 6,300. That's 28% market drop, all the way to 15,855. Okay. And if market hit 15,855, well, I may need my third batch of reserve funds. So that could sustain to 34% drop, up to 7,600 points. That's 14,555 for NASDAQ. And if I have the fourth batch of reserve funds, I can sustain close to 40% market drop at 13,455. Now, that's assuming that you keep opening one contract at a time at each 100 points level drop without applying crash limit or doing other things like that you pause trading. That's assuming that you keep opening one by one, and like a straight shoot down. Okay. And there's also assuming that you did not have any TPs, you did not have any, like, because usually if it drops like, 8,700 points, you already accumulate some TPs already. That will help to increase your overall balance, right? But this is like a straight down. Keep opening one order at each 100 points. So with 1-to-4 ratio, you could sustain 40% market drop. Now, will NASDAQ drop to, 13,455? I don't know. Right? However, I'm sure that you do not just keep opening contracts like that every 100 points. So let's take a look at defensive strategy, what we could be doing. And I'm sure that some of you have already applied some of these strategies. Of course, the first thing that we do is the crash limit. The crash limit is there to protect you. It's like when there is a huge drop, then we apply the crash limit. And when we see that when you first set up your trading account, and with that trading capital and contract size, we already estimated that you should be able to sustain a 3,000 points drop. And that is the reason why when you first set it up, we recommend that you set your crash limit 1,000 to 1,500 points below the highest holding contract, or below your when you first start, below the current value, right? So if it is 22,000 points, basically you set at least 1,000 points or 1,500 points below it as your crash limit. So that will be the first line of defense. And many of you have, of course, passed that crash limit already. And maybe in between, there are some gaps that you did not open any orders. And then you see the market kind of slow down, and then it actually moves below your crash limit. Some of you decided to, okay, I'm going to lower my crash limit so that I can start to trade again. Sure, that's one way of defense strategy. I'm sure that everyone is already doing that. The other thing that we could do is we could decrease contract size, meaning that whatever you're trading, now unless you're trading 0.01, right, that's the smallest you could do. But if you're trading anything bigger than that, 0.02 or 0.0, let's say 0.05, when the market goes down, you could decrease your contract size if you want to continue to trade. At least you can get some TPs, and that's hopefully could help you pay some of your holding fees. Just to give you a comparison. So if I use the same table of 100K doing 0.05, and it could sustain, as you know, 2,900 points drop. But if I downsize it, like right in the beginning, if I don't 0.05, let's say if I do 0.02, in this case, I can actually, with the same amount of money, I could sustain 5,600 points drop. So you can see that even like right now, when the market comes down, and let's say you add some reserve funds, no, you don't need to do your same contract size as before. You could actually decrease the contract size so that you can actually lower your risk, but at the same time, you can still take TPs. But decrease the contract size is one of the way to defend so that you can actually sustain a further drop. That's one way of doing it. Another defensive strategy that you could apply, I bet some of you may have not thought about this, is increasing the TP range. Yes, this is called the 100-point strategy. However, the 100-point is just an idea. You don't have to do 100 points. In fact, you can actually change it to 200 point, 300 point, 500 point. It really doesn't matter. But if you increase the range, it means that when when the market drop, you open a contract further apart. Let me show you the difference. Same thing. Let's say when we first started, let's say you open a contract at 22,155. At each 100 point as it goes down, our 100K can sustain 2,900 points. But if we change it to a 200-point strategy, meaning that we only open one order every 200 points down, so with the same amount of capital, you see you can now sustain a 4,800 points drop. Yes, it does take longer for you to TP, but at the same time, your risk actually decreases as well. So in a situation like this, you could change it to a further points. Instead of 100 points, you can make 200 points or 150 points. So that's another option. So besides shrinking your contract size, you could extend the TP range, or you can do both combined to minimize your risk. Another thing that we do is, of course, completely pause trading. I'm pretty sure that many of you are already doing that right now, that it passed your crash limit and you're just like, pause like everything. You're just waiting to see where the market is going, and you don't want to add more contracts, which I understand. But when you pause trading, of course, usually there is a question, and I see this question quite often in the group, is if I pause trading now, how many more points drop can my account sustain, right? How many of you have this question in mind? Yes, because now you have opened some contracts, and so if I don't add more funds to it, so where does it end, right? So how do we find this out? Well, I got a very lucky today that one of our traders, Connie Young, she actually created a spreadsheet to calculate that. Let's say you've opened 10 contracts and now you stop trading, and how much more can you sustain? So let me share with you how this Excel spreadsheet work, and then I will send you a copy of it so that you can play around with it later. Okay, so give me one moment. Thanks to Connie created this spreadsheet. I make a little bit modification on it. Now, notice that on the bottom there are two tabs. There's NASDAQ and Gold. Okay, so some of you are trading both, but right now I have not combined them together yet. I literally just received this Excel spreadsheet today. I duplicated and we created one template for Gold. But later on, once you have this copy, and for those who are very experienced with Excel, maybe you can actually try to help us to combine it together. What if you trade both together? But let me explain it to you how this spreadsheet works, and you may find it very useful. All right, so right here, this is the current NASDAQ index price. Let me take a look right now. Right now is 16,715. Now we already know that in here, we assume that everyone has already the highest contract open at 22,155. So based on that, it already calculated that currently at 16,715, it is a 25% market drop already. Okay. Now here, the contract size per USD 0.05, do not change this. This is not your contract size, okay? This is just the MT4 settings. And there's an exchange rate if for those who are using Canadian dollars as a trading account. And margin rate, that's the margin rate for NASDAQ trading in Canada, 10%. Now, and balance in your account right now. Now, because I was testing this Excel spreadsheet myself because my trading account has so many different products right now and it cannot reflect. And I don't know how to test it. But remember Wallace, my very good friend Wallace, who started trading this 2 years ago, and his laptop is still at my house. So I borrow his account. He only trades NASDAQ, and I borrow his account, and then I use his account to show you, and as an example, how to enter the entries into this Excel spreadsheet. So I'm gonna grab his laptop. Are you kidding me? His laptop is doing the updates, literally doing the Windows update. Done. Okay, we'll wait for it to do the updates, but hopefully it will be finished soon. But I'll continue to tell you how to enter the entries. Now, first of all, balance line. Basically, you look at your MT4 trading account and what is your current balance. If you look at your phone app, MT4 app, the first line, whatever balance that you have in there, you put this number. So let's say, okay, 30,000. Okay. And here, the contract size, we put in whatever order contract size that you have been doing. Okay, if you're doing 0.04, you enter that. You're doing 0.01, you enter that. You can enter the one that you're holding, that particular contract at that contract price. So for example, I remember Wallace, he got the highest, of course, the contract at 22155, and he was doing 0.01. Okay. And you check it, okay, do I have an open contract at 22.0.47? Yes, then you enter it. Enter your the contract size that you have. Because for some of you, maybe you start with 0.05, then you enter 0.05 into it, right? So, but in this case, for Wallace, you have 0.01. So on and so forth. Basically, you just continue to add all these contracts onto the list here, right? And now, because some of you may have hit the crash limit, let's say 10 contracts down. Let's say this is the first contract, and then second contract, third, fourth, 6, 7, 8, 9, 10. Okay, let's say you bought up to here, and then there's no more contract down here. Okay, you can remove this. So basically, you only enter whatever contracts that you're holding. And if they are a different contract size, you can change the number. Okay, let's say if these are 0.02, you can just change the number. Or maybe sometimes you skip certain numbers. So let's say like these, I did not have any open orders for 21147 and 21047. I could skip that. And then I re-enter to the market here, 20947. So you just enter this, right? So as you can see, when I continue to put these contracts onto this list, this red number, okay, margin level is reflecting your current margin level, 243% in this case. Now let's say that I stop opening more orders from now, okay? So what we don't want to see is when the margin level get to 50%, right? So now you can actually start to play around with here, the current index price, because we know that the current index is 16,715. So what if the current index dropped to 16,000 points. So I'll change this. Boom, you see that? The margin level is 210 now. What if it dropped to 15,000 points? Boom, the margin level is now at 163. Now this assumes that I don't do anything anymore on like adding more orders. Now, however, it doesn't calculate the holding fees. Okay, there's definitely some expenses to it, but we look at the big picture right now. So let's change it to 14,000 points. Okay, 117, 13,000 points. Okay, so if NASDAQ dropped to 13,000 points, I am in trouble now, 70% margin level. If it dropped to 12,000 points, boom, it's gone, right? So as you can see, this will be very, very helpful. Now, of course, you will enter your information based on your current balance and what kind of contract size that you bought at every single order, okay? So that's how you play with this. And for gold, it's the second tab for gold. Now, I know we all kind of combine gold and NASDAQ together, but I haven't put them together yet. But let's just assume right now you're trading gold separately. So similar situation. First of all, I need to enter gold's price, 29.81. 29.81's current gold price. And once again, this contract size per USD, do not change these settings, okay? This one, don't change it. And balance, enter your balance in your MT4 account. So let's say 50,000, okay? And the highest gold contract holding, if you've been trading up till gold hit the record high, probably the contract you're holding right now is 31.67. So whatever contract size that you are trading at, let's say 0.03, okay? Put a whole bunch of contracts in there. And let's say it hit your crush limit here, so you miss a few contracts, and then you reopen here, but you open it as a smaller contract size, right? And you open a whole bunch of contract here. And then hit your crash limit again. Okay, now it drops to here, and I start to open smaller contract size, so on and so forth, right? So as you can see, the margin level changed to 602. But what if? Now, what if I don't open more gold contract now and gold continue to go down? Let's say go down to 2,700 or 2,700. So now my margin level will be 385. What if it goes to 2,500, 230, so on and so forth? I hope you get the idea. So up to here, does anyone of you have any question? Is Connie in the room?
Yeah, I'm here.
Thank you, Connie.
Hey, no
Everyone
problem.
give Connie a round of applause. Thank you for doing that.
Well, that's the least I can do. We're in it together.
Exactly. And just so you know, Connie was my classmate at UBC. We took engineering together. So of course, Connie is really good at math as well. So that's why, that's how she created this Excel spreadsheet. So I don't know if I could send this Excel file uploaded through the chat. Okay, I see some questions. Billy.
Yeah, I'm actually just going to verbalize John's question because it was great. And I have a second piece to that. He was saying, John, where was your question again? Is there a way to see if we close some contracts that are already open, will that also, if we take that part out of, like, we have this contract open, will it reflect in the margin like the opposite way?
Good question. So the question is, if you close out some of the contracts, does it help improving your margin situation? Is it?
Yeah,
it-
because I'm trying to figure out if I should close gold, if it's the high or low ones, or if I should, because all these are cheaper than
Okay.
the NASDAQ ones. I'm trying to figure out
Okay.
how best to play that.
So let's go back to that Excel file. In fact, you can actually see that. Now, earlier there was a question about which contracts to close. Okay, should I close the one that is losing the most, or should I close the contract that has the less impact in terms of the losing value? So I am still getting a conflicting information even from CMC. Okay, because I'm trying to figure out the margin for each contract that you open. And now, when I first started trading with CMC manually, I can 100% see that when I open a contract, and of course, it takes certain amount of margin, right? Let's say, just throw in a very simple number. Let's say if NASDAQ is 20,000 points. And in manual side, if I buy one contract, or you can say 0.05, okay, one contract, and if the margin rate is 10%, CMC will hold basically 2,000 as the margin, right? Because 10% of 20,000 is 2,000. Now, if NASDAQ goes down to 19,000, I open another contract. Now the 10% of that 19,000 is 1,900. So now my margin is I have one contract at 2,000 and one contract at 1,900. So the question is, if the margin, total margin, is it 2,000 plus 1,900? Or is it two contracts combined at 1,900? So when I was trading manually, I can 100% sure that the margin, total margin is dynamic. It actually changes based on the current NASDAQ value. Now, recently, there are questions about, no, that's not true, because when you bought it at 20,000, then your margin, that contract is 2,000. If it dropped to 19,000, when you bought another contract, then your margin is 1,900 in MT4. So I got confused. So I asked Eric at CMC today, in fact, he's on holiday in Japan. I asked him, well, which is the way? Is it like dynamically changing, or is it actually fixed? So he actually said that it's dynamically changing. So, okay, well, that proves my point that when we close a contract, I should just close the smallest losing value one, because it free up the same amount of margin compared to the highest value one. However, today I realized that in MT4, your total margin is actually not moving. That number is not changing. If you're not buying any extra contracts, that margin number is not moving. It only changes when you open another contract or you delete another contract. So now I'm kind of thinking maybe actually is the other way around. It is actually when you open a contract at high price, it stays in that contract value. So in fact, when Connie built this Excel table, it actually follows that rule. So let's actually go back to NASDAQ. Okay, this is the NASDAQ tab. Looking at, let's say, let's change this value back to current index. Where are we at? 16,749.
You're on gold one. You're in the
Oops,
gold
sorry.
one.
Thank you. Right here. 16,749. Okay. And let's say I do have 100K. Right? And let's say I do 0.05 here. Right? So as you can see, on the right side here, there is the margin in USD. And this top one is using 2215. And then the second one is using 2204. This one is 2194. So it actually goes down. I mean, is it a lot? Not really, but it could be quite a difference when this 0.05, let's say, is here. So this one is 1964 compared to 2215. So to answer some of your question is, if you have to manually delete an order, and if you say, okay, I am okay to take this loss, this 2,898, and I delete this particular order, I will free up 1,964 in margin. Do you see what I mean? So if I change this from nothing, I will realize that 2,800 loss, but I free up 1964 in margin. Does that make sense?
I want to top up one thing. What this tool doesn't do, to answer Billy's question, if you actually sell that, you have to manually deduct that loss from your balance. So right now you're starting with 100,000 USD in balance. Let's say you still have that much in your account. If you are willing to take the 2,898 USD in loss, you immediately realize the loss. Your balance will now become 100,000 minus 2,898. So you need to make that change yourself. Okay.
That still affects the margin then, because now you've lowered your
the margin will be you don't need to worry about the margin. The margin will be automatically, because once you delete that row will be gone. But what happened is you need to know when you actually do execute that trade, your balance, when you actually do that, your balance will not be the same anymore.
Yeah, and you'll see
lower
that.
your balance then would it still automatically not increase the margin as much because now your balance is lower?
So we can do a test right now. Okay.
Yeah.
Now, so what Connie is saying that if we delete this, okay, first of all, if I just take it out, you notice the difference. So your margin level in here went from 181 to 209. However, what Connie was saying that we actually need to deduct 2,898, something like that, from the balance.
Correct. That's the loss you would have when you do actually make that change.
Okay, so there you go. So the margin is actually 197.
And let's do the undo and see if it actually improves.
Yes. See, it was 181, right?
Yeah.
And if we delete this
and realize the loss immediately.
What was it? 2,898.
2,898.
197.
Yeah, so you're better off.
So you increase your margin level from 181 to 197 by doing that.
So it's almost half. I'm trying to do the numbers here. So it's almost like you increase it by 30, but then if you realize your loss, it takes you back down another about 15. So you increase margin about 15% ish. Am I doing that math right? By taking about a $3,000 loss.
Yeah, well, that actually,
I don't think it's proportional.
Yeah.
I think you can think of it like that, but that's the reason I built a spreadsheet, is I find that it's not a linear scale. So the safer way is to actually put in the numbers, just to kind of make sure you have that. And it also depends on what price you sell it as, right? Right now is assuming that you know, you're selling it at 16, like the when NASDAQ is 16,749, right? If you take the loss later at a different price, then it would be different, right? So this is kind of where that's why there's a limitation to the model a little bit. Like you have to understand how much you're comfortable in taking that loss and just and kind of put it in there directly.
And put it this way, like we don't recommend you to realize that, you know, that loss unless you really, really have to, right? Because go back to the defense that I talk about here is, okay, so pause trading is one. Then adding reserve funds is, of course, a priority. Like, you know, when your margin level drop below 200%, you should add reserve funds. Really, like when you don't have the reserve funds, maybe you think about how creative that you should be able to like find your money, right? Take the advanced training class, creative financing by Brooke and raising fund by Ray, okay, to find money. Now, but the other thing that we could do is, of course, what we are talking right now is remove open orders one by one manually, and this is really the last resource. It's like almost it drops below the 100% line, and now because you don't have access to funds to put it in right away. I mean, we tried like credit cards and everything, and you send bank transfer, and then you call CMC, and then let's say the market is still dropping very quickly. Okay, well then this is the last resource, is to remove open orders one by one manually. And now you have this spreadsheet that you can actually test, okay, which order should I remove and how much more margin that I'll get it back. So that's what we're doing.
Okay, so the other part of my question, Stephen, was if you could just go to that spreadsheet again, because I've made my own business decision that I don't want to put any more funds in, because now I would be going into it, like, because of the way the market is right now, we don't know where it's going to go. It's not like one of the other drops that happened in August or February last year. Like, this is kind of unprecedented. So really making me nervous to put extra costly funds in. So my question is, if I'm going to close orders, if it gets below to the margin call and they liquidate, which number gets liquidated? It's not the balance, right? It's the open margin, or is it that red number that's at the top that gets taken out?
Well, because the market keep changing,
It's the
and
unrealized loss, right?
Yeah,
If you
yes.
scroll all the way to the bottom, Stephen, I think there is a total line. That is, I should probably put it up there. That total, the unrealized loss, yes, unrealized loss is 54,844. That's what will be liquidated.
Okay, so that's
If you get liquidated at when NASDAQ is 16,749. If you change to, let's say, 14,000, you get liquidated. That number changed now. You will be liquidated by 86,733 USD.
got it. Okay, so whatever the balance remaining is, I guess that would only be like 14,000 left at that point.
Equity, yes.
Yeah. Okay. Okay, thank you.
John, did you have another question?
Yeah. Hi. First of all, I just want to say thank you to you, Stephen, for and the team for making this tutorial sooner than it was supposed to be. Second, Connie, you are my new savior, so thank you. I just wish you were here a few days ago. That's all. Anyways, I'm curious about this spreadsheet. My interpretation is that the two spreadsheets do not really connect. Is that correct? Because for those
you mean
of
the
us that are
NASDAQ and
trading-
gold?
Yeah, for those of us that are trading both, I'm assuming
Yeah.
that the margin level does not correspond, right? I just want to be
Not
clear.
yet, not yet. So I'm waiting for one of you guys who is the Excel expert to kind of combine it into one, because I literally got this Excel from Connie earlier today for NASDAQ, and then I created a gold. So if any one of you are expert in Excel, please try to combine it together for us.
I only trade NASDAQ today. Sorry, I don't know how to do gold yet.
Okay. Any volunteer?
I do actually have another spreadsheet that I modified it from your Stephen spreadsheet that can kind of do both. That you can find out if you trade in Dow and Nasdaq, you can combine to see your real time margin.
Oh, Tommy has another spreadsheet.
Yes, I do. Is there any way I can share that or in the stream right now or?
Do you have like if you drag your file to the chat, see if you can actually send that.
Well, I can send the link, which is a share or is a
Oh, yes,
Google Drive.
It's a Google Drive. Yeah, if you can share the link.
Let me share the link. Actually, I'm using my phone for the Zoom, and my link is on the PC. How can I share that?
Someone asks, can I use this spreadsheet to determine how much funds I may need to inject if I choose to do so? Absolutely. Like basically, we go back to this example, and let's say right now in this situation, the margin level is already at 53, right? So it's like a very risky situation, and let's say your balance right now is 100K right there. So if I add another, I don't know, like let's say 20,000. Does it make sense? It brings the margin up to 134. That helps a lot. That much? Am I doing the math right?
I think I think you are right because the total margin is not very huge. So when you add like a $20,000, it increases the percentage a lot.
Okay, so there you go. So in this case, like you can determine like where your margin level you want to bring it up to, right? Because originally I have that 100K in here, and it was like margin level is 53. But if I add 20,000 to it, it already brings the margin to 134.
So seems like someone already joined the Google Sheet. Can you bring it up so that I can have a few words?
Okay. So I get access to the Google Sheet already.
So basically, this is kind of based on your spreadsheet, but I modified it so that it doesn't. It's all in one spot on the left, so it doesn't. I don't have to scroll all the way to the right to see all your margin. And I did kind of move things around so that you can see all the margin at the left-hand side in the column H. So that's where your margin is. So in column O, that's where you will have to have all your MT4 size contract that you put in. So if you by default is 0.05, then you don't have to do anything. But if you did kind of stop trading at some point, then change that number to a 0. Then basically it's the same as what Tony has. So you change that. And then do the same for the Dow, same thing. Now, when you have all the information enter, go to the combine margin tab. So right here, all you have to do is basically is pull all the information from your the Dow tab and the Nasdaq tab, and then all you have to do is right here is just to change your position, the current price of your the Dow and the Nasdaq in the B3 and B4, then and then once you enter that information in, the I6 or I5 will tell you your current margin combined for both Nasdaq and Dow.
I see. Okay. There you go. So this is a more sophisticated version of calculation. Okay. Thank you, Tommy.
Yep.
Huang Lu, you have a question?
Yeah, I do. So it's two questions. So I'm just starting off here. So my first question is when I look at the margin calculator and I'm trying to figure out what my crash limit is, how do I adjust that to the contract size?
What do you mean by adjust to the contract size?
Well, because we're able to buy it at 0.05 or 0.02 or 0.01,
Right?
right? So when we're using the margin calculator, how do we adjust it to know where we should set the crash limit so that it takes into account that contract size?
Well, if I go back to like, Connie's Excel spreadsheet here, basically you change this contract size to whatever that you have in there, right?
So if we were using the other margin calculator sheet though, that one that's given to us from the course material is.
That one actually, when I first built it, is based on the manual calculations. So for NASDAQ, like we're doing like one contract equals to 0.05. So if you change that one, basically you have to divide it by 20, the value, or whatever that you're doing on the MT4. Let's say 0.05, you have to multiply by 20, so it become one contract size. But I think now that you have this tool from Connie and Tommy, this could be actually work pretty well too. So maybe you can use this.
Okay, instead. Okay. Okay, so that's fine. So then my second question is so if we're just starting now, we're not in this situation where we're
No.
sitting and waiting. So then what's the strategy that you would recommend for those of us who are just starting now?
Okay. First of all, well, you are in a better position than most of us because now you're buying at a very low value. So you basically skip all this, like, this high contract price, like, you don't have these, right? And then you could literally go all the way down to wherever the current price is, right? And let's say, 6947, you buy your 0.05 here, right? But the concept is still the same though. It depends on your capital, and like you set your crash limit. And however, right now, because of how crazy the market is, I would recommend you to set a tighter crash limit, because usually we do a 1,500 points below your highest contract. I would do right now maybe 700 or up to 1,000 points below your highest contract. I would set the crash limit there. You want to make sure that you have a very tight crash limit.
Okay. And then would you still recommend us buying 3 up and 3 down?
You can always change that. It's up to you. Like in the bot, like you could do like 2 up or 2 down, right? That's totally up to you, right? If you have concern with that, then you adjust the crash limit. Let's say I said 1,000 points, right? But because it's buying 3 more for you below that crash limit, so you can actually change your crash limit like just 700 below the current highest value, and then so that it will add 3 more contracts that equals to 1,000 points. So it's the same too.
But because the market down, is it better to only just buy above so then you're waiting for it to go on the upswing? Or do you also want to buy it on the down as well?
With our strategy, we buy it on the down as well. But if you have concern, then you set very, very high crash limit then. You basically set your crash limit just right below the current market value.
I see. Okay.
Yeah. And then continue to push it up. Adjust it manually if you want to just buy when the market goes up.
All right. Thank you.
Okay.
I have a question.
Yes.
I couldn't find the hand raising icon. For Tommy's spreadsheet on the combined tab, what do you put in under the position?
I'm sorry. So can you read your question?
So under position, what should I put in?
So in the combined tab, if you go back to the, let's say you want to enter the current position for the NASDAQ, the B3, go to your NASDAQ tab. So look at what is the current price right there. If you go, you may have to scroll to the right a little bit to see the current price. I believe it's around, we're now at 40, row 47, maybe. So what is the current price right here now? 19, yeah. And then if you have that, scroll all the way to the left, you will see the position right there, 41 or 42, right? Whatever the price is. So just to match that with the current price of the NASDAQ.
Oh,
So that's assuming that you've been buying, one contract, one position at a time. So, and if it is the current value, it's at, for example, here, like 18,238.
Or
No?
the other easy way to do it is just to look at the 51 is the SL row, and then just subtract by 10.
So look at the current value, which is 16,767. So which is around here, which is this
Yeah.
row. And then we scroll to the left and see that, okay, then
So
56.
that's 56 is your position.
56.
Yep.
Okay, if you did open one at a time, like at every 100 points.
Yes, assuming you did, but if you didn't, then you have to modify the MT4 size manually. So if you have two the same contract size or same number, same price, then you have to add it manually.
Mm-hmm. And because Tommy developed this spreadsheet based on my original spreadsheet, so it is actually the manual contract size. Whereas the Connie's Excel, it's based on MT4. So that's why it's like 0.05. Is that right?
No, because I did modify this so that when you enter the information, you want to enter the MT4 size. So if you have a 0.05, then you put 0.05. So the row N is just a calculation from the whatever you put from the column O. So because I use the MT4,
that's the MT4 size. Okay.
So when I want to compare, it's easier for me to compare instead of converting into the manual trade contract size.
Okay.
Oh, so just to make sure, the position is just the current market where the market is at, and I go to this tab to find the reference number and put
Yes.
that reference number
Yes.
under there. Okay,
Yes.
it doesn't matter whether I have open contract at that point or not.
It doesn't matter. No, it doesn't
Got
matter. It just, yeah. Well, I used the last NM value of 38 instead of 47. So if you guys are using 47, feel free to change it to 47.
Yeah, thank you.
Yep.
Thank you. Kim.
Someone mentioned that this file is not downloadable. Can anyone actually make a copy of this to your own Google Drive?
Yeah,
You can, right?
I
Okay.
did. Yeah.
So and then you can modify any way you want. Then
Yeah, you have to download it first though.
okay. Someone mentioned that they cannot download it. Can you confirm that you can download?
Yeah, you just go to file and then
Okay.
download
Okay, good. So
to
for
Excel.
everyone,
Yeah.
for everyone who need to download it.
Yeah. So go File, Download, Excel, and then it will go into your download folder. Kim, you have a question?
Can you just do an example of just enter one thing? And I'm not gathering the concept of position. I know it's looking to where the contract size is,
You mean
the row it's at.
So I think Stephen already mentioned it. So the current price, what is the current price for NASDAQ right now? 168 zero zero.
800, yeah.
So if you look at your row column
Okay,
K, yes, and then go find the 168, the closest one, which is 16847,
Yeah.
and then you go all the way to the row column A to see what the stop position is, which is 55. So that's where you put 55 in the combined tab.
Okay,
as
so
the position.
that's just checking it, like you're checking it as it's going down and you're just checking the margin by putting in the lowest open order, or sorry, where the market is right now. Can you go
Yes,
back to
with-
combine? Because I might have missed what you said there.
so you enter this number 55
yeah.
into the combined
Okay,
tab
so,
right here, 55.
okay. And then it automatically calculates the total number of contracts. That it does all the rest. Sorry.
it will add up all the contract that you have enter in the
Okay,
Nasdaq tab.
gotcha. Mhm.
So basically in this tab, all you really
Mhm.
want to see is what's your current combined
Okay.
margin.
Perfect. Got it. Thank you.
Thank you.
Tommy, would this work if we have gaps in our
Yes.
contracts?
It-
And
Yes,
do-
you
what do
just have to
delete?
change. You just have to delete the that whatever you didn't buy from 0.05 to 0. So you have to. By the way, you have to. You don't want to delete just delete. You want to put a 0 in there, in the MD4 column.
So
O.
in other words, column O here, you see all these 0.05. And if you don't have an order there, just delete this.
Don't do delete. Put a
No.
0 there.
Put
Put a
0.
0 there.
0.
Because I made it in a way that if we delete, it will just take the default number as a 0.05.
Okay, okay. So put a 0 there.
Yep.
Okay. Thank you. Any other question?
So
Lisa. Lisa has her hand. Yes.
Okay, so this is not about the spreadsheet, but I guess another strategy that I've been using and have shared is, and this would only work, I guess, if you're already up at above your 200%. So you'd have to have, I guess, enough reserve funds in there already. But I had hit my crash limit and I didn't want to sit around just absorbing all the fees every day. I know that a lot of people were complaining about that on the chat too, in terms of all the fees that they were paying. So what I thought to do was just add some manual orders. I waited for the market to basically bottom out. And then when it was at the lowest level, I kind of checked the moving averages to see, you know, where it's bottoming. And then I start adding orders and I only long up. So I start at the bottom and I have one order, and basically it'll catch the one order because that's the current market position. And then I add orders all the way above that. And that way it's kind of like a chain reaction. If you see that the market is on an upswing, then you can catch that upswing, and basically you only have one extra order open, but it's longing all the way up to possibly, hopefully your crash limit at that point. And the volatile days that we had a couple days back, I was able to capitalize on that because I was just basically logging all the way up, if that makes sense. So I'm not sure if that's what others are doing, if that's a suggested strategy that you recommend as well.
It's
but I
definitely
wanted to-
possible. However, it's just that it involves several things. One is you have to know how to manually place an order. Number two is it also requires you to kind of monitor the
Yes.
market more often
Right.
than
Yeah.
normal. So yeah, it's possible.
I think everybody's monitoring the market right now anyway.
True. Recently, yes. So that's an option, sure. Like, that will basically create orders only when the market is going up, and not going down, right? So you
Right,
manually
exactly.
create order. Yeah, that's one way of doing it as well. Thank you for your suggestion. Andre.
I think Lisa shared a very good point because I was trying to figure out a way that because I paused trading quite a while, and I was thinking how to make a strategy to just maybe take a 1 TP or 2 TP per day just to cover the holding cost. So basically to elaborate more on Lisa's strategy, probably we can make it 200 points away apart.
You
And
could. Yeah.
on an upper trend. And also going back to Tommy's spreadsheet, if we are increasing the TP range, so basically we have a place to change to from 100 to 200 or 250.
You could, because when I look at Tommy's file, because he created that file based on my original spreadsheet. So the second question on it says how many points do you want to wait before opening another contract? So you change that from 100 to 200.
Okay. Yeah. So from your past, because I look at the downtrend and uptrend, I'm not sure 200 or 300. Do you think it's a big? It's possible to take that TP for 300 points or even 400 points.
Recently, yes. When it comes down 1,000, it actually goes back up another 900. So yes, it's definitely possible.
Okay. Yeah. Maybe that's something I can try just to cover the holding cost.
Okay.
Yeah.
All
Thank
right.
you.
Thank you. Any other questions?
I have a question here, Alina.
Yes.
I wonder how the holding cost and transaction fees are calculated.
At CMC website, they have a formula. I don't have it on hand with me, so
okay.
we
So
could.
I was trying to look it up and I couldn't find it.
Okay. So maybe I'll try to find it and then I'll share it in the messenger group later.
Okay, thank you.
Okay. Shasmin.
So I'm just playing around with the spreadsheet that Connie sent, and I find when I add funds to the balance tab, instead of my margin level going up, it kind of drops, which shouldn't happen.
That doesn't make sense.
Yeah. Has anyone else tried it and seen the same issue?
I think it might be related to your current margin level. So I haven't do the calculation, but my feeling is in some case, it could decrease your margin level. It really depends on where you are.
But I'm increasing my funds. It should be taking my margin level up, not down.
Really?
No.
Having this same issue?
For me, my margin level not moving at all.
Yeah, it shouldn't move. Sorry, it should go up, right?
It's not even moving for me when I try to do that.
That doesn't make sense because let's say if I on my screen here, the balance, if I change from the 120 to 140,000 and notice that the margin level went up. Maybe try to re-download the Excel file. Maybe somehow you deleted some formulas, equations in the file right now.
Sure, I can give that a try.
Just download it again. Save another copy. And we enter your entries.
Maybe they have to enable editing.
Because I tried it, it works. So
yeah, without enable editing, we will not able to put that data in, right? So
okay, like change. You mean like depending on the field. Some fields like you cannot change it. Like Well, you could definitely do that. Well, first of all, like this is like a very preliminary Excel file that Connie created and I modified it today. So it is quite a rough copy. What we could do is we could continue to modify this, and if someone could actually change it to like a combined NASDAQ and gold together as well, that would be great. So in the next few days, hopefully we'll continue to modify it and then share it in the Messenger group.
Sorry. So I have a question. So for the person who just mentioned that the margin level actually went down, I'm just wondering what's your current margin level?
It's 177.
Above 100 or below 100?
Above 100.
Oh. Okay.
I would suggest you download the Excel file again and try it again.
Yeah,
No, I still want to mention that it's possible that the margin level will actually go down when you accepted the loss, realize the loss. It's possible in some situation.
Oh, okay. So you're talking about if you actually
I'm
realize.
talking about Connie's sheet, not about closing any positions or taking any loss. I'm just want to try to calculate that how much reserve funds I need to put in and where it will take me and how long.
Oh, okay. Sorry, that's different situation.
Well, I guess I mean now everyone has this Excel spreadsheet, and you can play with it tonight and give that a try. And Jenny, you have a question?
Yes, hi Stephen. I just wondering if we can set an upper limit on the trading bot, just given the current stock market experience like very volatile ups and downs. But I find it typically remains within a range within like during a day, but like just having an upper limit can prevent it from like the market just jumps up like excessively and then opens an order at a very high value and then it came back down.
The bot does not have that feature built in. I understand what you mean. Like basically yesterday, like literally it jumped up 1,000 points and then came back down, right? So you don't want to have all those contracts open when. But it kind of defeats the purpose of keep buying when the market moves up. In fact, most of us actually don't mind to buy when the market moves up. So I don't know if it's actually possible or makes sense to set that setting though.
Okay, I see. Because right now I'm just doing manual trading, but I'm just wondering if we can set an upper limit. Maybe the bot can do some work overnight. And with the current tariff situations, I'm just like not sure how much the market will go down. So I'm just curious. So
to answer your question, no, the bot does not have this function at the moment because for us, we prefer to keep buying especially when the market goes up, right? I mean, if you don't want it to buy, you basically have to stop the bot. But of course, like the market is so volatile, we don't know when it will actually jump up like this, like 1,000 points, right? So.
okay, I'll think about it. Thank you.
Okay, Andrew.
My question is, so for the spreadsheet that you, like the liquidation point spreadsheet that we're looking at here tonight, like I never traded anything in USD, like I used all Canadian funds, and obviously like the MT4 app is in Canadian dollars. So for the spreadsheet, do we have to put anything in for balance USD if we're only using Canadian, or do we just kind of leave it blank?
Well, it's automatically calculated based on USD.
Because you can override it. You can override it, Andrew, if you like. You can directly input into the that cell. You can just type it in.
Yeah, like that's what I did. I put, my balance in the Canadian funds like cell, but it didn't populate in the USD cell.
Which you don't care, right? Which you don't care because you only trade in Canadian dollar, right?
Okay,
Yeah.
no, that answers
Yeah.
my question. I was just wanted
Yeah.
to make sure that I don't need to worry about that.
Yeah, you don't.
okay.
Yeah.
So you just use one or the other based on what you're
Yeah.
doing. Cool. And then my other question was, and I know it says this right here in the spreadsheet, might as well ask it. At the top in cell B4, you just leave that at 0.05 and then you manually put your contract size in the
Yeah, that's it.
for each
This
order, right?
0.05 on B4, do not change it.
Don't change it. Okay, I know it says that. Just wanted to be completely sure. And then I know Billy kind of asked this one a little bit earlier, but I'm sure we're all thinking about, if we get to a point, where we individually have to make the decision to start to close out orders. The loss that we're realizing is right here. So yeah, gain loss in Canadian is kind of the hit you would take for closing that order. And just by deleting the contract size, we can see what that does for our margin, right?
Yes.
Correct.
Yeah, killer spreadsheet. Thank you for putting this together. The whole thing answers the three main questions I kind of couldn't quite figure out on my own with my current Excel abilities. So no, this makes the picture much more clear. Thank you.
The only thing which is you need to know, if you do think about closing contract manually like that, yes, it will free up your margin. You will see the margin line goes up, but you have to manually type in the loss. You will actually realize into the 250,000. You have to subtract that.
So
I just
in
want to
this
call that out
example-
again. Yeah.
Yeah,
So in this
so-
example, if you decide to close out this particular line, so you have to, this balance line has to minus the 11,580. So for example, in this case, I will have to do manually enter minus 11,580 and then delete. So that will be the updated margin level.
Okay, I didn't just change the margin level there, I don't think, but neither here nor there. It's all good. I can play around with that tonight, and I'll make sure to do that. I think that's super helpful.
Okay, thank you, Susie.
Oh, Lisa just shared how she manually opened order on the upper trend. Was all the orders that you open manual?
Yes, they were all in manual. So basically I would open at the current level, and so it would actually be put into play. And then what I would do is put in pending orders for everything above that. And that way I didn't really have to watch it so much, because if it was on an upswing. So the other day when everybody thought that Donald Trump was not going through with his tariffs, and there was a big upswing. Basically, it was just firing off, and it would just set off a chain reaction, because I started with my bottom lowest order, and it's only one order open, right? So you're not using a lot of margin in that case. It's one order that's open, and it's basically triggering through all of the pending orders that are above it and getting to the highest.
So you
max
also
value.
put in pending orders.
Yes, yeah, I entered manually my first order and all the pending orders above it as well.
Got it. My next question is for Tommy. In the Nasdaq and gold, do you put in your balance? Do you put in how much capital do you have? Is it a combined between Nasdaq and gold, or you assign for example, half of your account balance under Nasdaq and half under gold?
You will still want to assign your portion for gold and portion for Nasdaq in their own tab. But then when you go into the combined margin, it will actually add them all up based on what you have left as a margin.
Right, but it doesn't matter. I can just split my account balance in half.
you can do whatever you want to portion. It doesn't really matter for the margin. It will actually just take, don't combine margin. It will just take the actual margin you have from that tab, and then we'll just spit out the your combined margin.
Okay. Okay. It will add up the capital into one pool too.
Yes, in a way, yes.
Okay. Thanks.
Billy.
Yeah, thanks. I was just trying to play with the things. If we're doing both gold and NASDAQ, do we just split kind of the amount half by half, or like is there a way for us to kind of decipher, okay, we can use more of our funds in NASDAQ and gold? That's what I'm trying to figure out. What amount do I put in of what I'm trading?
That depends on when you first set up your trading contract size, right? Because for example, like when I always say, like, if you have 100K in it, if you just do NASDAQ, then you do 0.05. But then if, let's say, with 100K, you want to do both, maybe you can kind of allocate 60K for NASDAQ and 40K for gold, so that your NASDAQ, you will do probably 0.03, and then for gold will be 0.02, right? So pretty much every 20K, it's 0.01.
So if I initially had it split down the middle, except now I've put reserve funds in, should I be putting that reserve funds in as the adding to NASDAQ? Because that's what I'm trying to.
The thing is, it is a share part of balance, right? Yeah. So if you put in the reserve funds, it is shared among both products anyways. So you don't have to manually assign, like, this is how much I want for gold, this is how much I want for NASDAQ. And by then, chances are you are monitoring your margin level overall. I think that's the most important thing.
So if I have, say, just to keep numbers simple, 100,000 each on gold and NASDAQ, then I put in another 200,000 or 100,000 into NASDAQ. Now that number in the spreadsheet, I should put 200,000 in NASDAQ and still keep the 100,000 as gold.
You could do that, but of course it also dynamically, the combined value will still change at the same time, depending on the current value of the NASDAQ and gold, right? So you really have to play around with the Excel. I cannot give you an answer right now.
I had a question and then it escaped me. 1 second here.
We can come back to you. Richard, did you have a question? I saw your hands up.
Yeah, I actually just have a comment. Actually, I'm doing what Lisa is doing, namely manual trading, depending on the market opportunities. And I would actually go one step further. Instead of upon taking the profit, instead of that profit sitting there, I would actually use the profit to offset some of the losses of the contracts open at higher orders. So for example, I'm back in my trading zone for gold. So right now gold is going to start auto trading, and then it's going to take profits, and I'm making like $20 per TP. So if I have like, I don't know, 10 TPs, that's enough to cover 0.01 contract size of gold held at 31.37. So I would manually and partially close some of the orders. So the goal is to stay one step ahead of realizing the loss. So you make money and then you realize the loss. You make money and realize the loss. That way you start recouping some of those margins that you can reuse and reinvest into regions where TPs are happening, so that you're not just taking a loss and harming your principal. You are releasing margins without harming your principal by TPing and covering losses. You stay one step ahead of the losses. Yeah, I just want to share that.
That's also a good suggestion. Thank you, Richard.
Oh,
Andrew.
yeah, Richard, I really like that. But can you close smaller contract? say you have a greater contract size of gold for on the higher end, can you just close that 0.01 of gold
Yes, you
instead of
can.
0.05?
Yeah, I can show you right now if you want.
Yeah.
Or actually, no, I'll send you a video. Actually, I'll send a video in the general group chat. I recorded a video for some people, and then I'll just share it. You can manually close. So right now, for example, I have my highest gold, 3137. I have a contract size of 0.23. I can, instead of closing 0.23 and realize $3,000 loss,
yeah,
I can close 0.01 and I only realize a loss of $135. So if I make, say, 6 TPs for gold, $20 each, I can close 0.01 and release some of that margin. I know it's not a lot, but you know, every little thing counts, right? You
It's
eat the
strategic.
giant, right? You eat the giant one bite at a time.
Yeah, I love that.
Thank you, Richard. Andrew.
Yeah, I was just thinking about the question, and Richard may have actually answered it there, but we can change an existing order's contract size, right? Rather than closing out the like taking the full loss, we could change it. We could just adjust the. Is that possible?
I think that's exactly what Richard just said, that you can actually modify it.
Thought that. Sorry, I was looking at something else, but I'll just watch that video that you're going to post. Thank you, Richard.
Yeah, I just shared the video in the group chat.
Okay, thank you.
Any other question?
Just wondering, you cannot change the contract size, right?
If you bought 0.02, you cannot change it to 0.03, but you can choose to close 0.01 out of that 0.02. Did that answer your question, Jordan?
Sorry, say it again.
If let's say you have you bought 0.02 contract size of, I don't know, gold, you cannot change that contract size to 0.03 because you bought it at 0.02. However, if you want, you can choose to close 0.01 contract size instead of closing the full 0.02.
Okay,
Is that what you're asking?
Personally, never tried that, but that's a very good suggestion, though.
I mean, that's you are partially closing that contract.
Yes.
Okay, gotcha. Thank you. I never tried that before.
Yeah, it's a nice feature.
Thank you, Richard. Any other question?
Sorry, so are we wanting to close contracts that are losing money if we have a little bit of TP because we don't want that loss to get bigger?
No, I just want to stay one step ahead, right? Because I don't want to harm my principal. If you realize a loss of 3,000, that's $3,000 fully gone. However, if you made 3,000 and then you have a losing contract 3,000, right? You realize the loss and the gain at the same time, and then you get back your money, your down payment, your margin. Yeah.
Original. Okay, got it.
Andrew, did you have a second question? I still see your hands up. Andrew?
Yes. My final one is super basic. My head's kind of spinning a little bit. I'll just gotta think about it. I'll lower my hand and I'll ask it in the chat or something. Thanks.
Okay. All right. Kelvin.
I don't have a question because the question I have already asked in the Facebook group. It's about the margin calculation. So I just want to mention that we got the margin calculation file from the training course, and I think that needed to be updated because the way it calculated the total margin is not accurate.
I said earlier earlier today that I also get conflicting information from CMC, because when I first built that particular spreadsheet, it was based on manual trading. Yep. And if you even open a demo manual trading account, the margin used is actually dynamic, meaning that let's say you open an order at a high price, you're paying a certain margin amount. When the market drop, that margin amount changes based on the current market value. So based on that principle, I build that Excel spreadsheet. So when we migrate to MT4 trading platform, I would assume that CMC should use the same principle when it calculates margin. But based on what Connie built in terms of that Excel file today, I see, okay, well, that's actually when you close a particular order, it's based on your buying price, then you free up that margin. So that's why I actually asked that question to CMC, Eric. But Eric says that no, it shouldn't be, it should actually based on the current margin value. So right now, put it this way, I still need to verify that because even CMC cannot answer me that particular question. But I know exactly what you mean. But based on your calculation, you can actually just use, based on your assumption, you could use Connie's spreadsheet because that will be the same as what you are referring to.
So
Yeah,
I
the
do
way
sorry.
I mean,
I just
the
want to
way-
say that I do actually have the same concern as you. I ran the same what's it called, the margin. Actually, it's based on the buy-in price.
Buying price.
So
Okay.
yep, and so that's why I changed the your spreadsheet 7 to use a buy-in price instead of a dynamic. So and then once I changed that, it actually matched my MT4 margin spot on.
So it sounds like that even with CMC on the manual trading side and the MT4, they are using two different systems when it calculates margin then. Okay.
Yep.
Yep.
Thank you.
And just let you know, so the way I know how it was calculated is I just look at the MT4 app and I look at the total margin, it never changed. So I know it's using the way I mentioned.
Thank you. Thank you.
No problem.
Well, one thing I want to say is what a great community we have here at TYT. I find so blessed that we have a very strong community and we are in this together. And obviously, even as a trainer, even I developed this strategy, I don't know everything. Okay, I'll be very honest about that. I don't know everything. And we are still learning this on the fly because, well, we never expected, the world is like this because of, Donald Trump said one thing, it can drop like 1,000 points just like that. It's a very, very different time. It's an interesting time that we are in right now. Nobody actually expected that. So we're learning. And thank you so much for all your inputs and support. And that's how we grow. So I want to end this particular tutorial by thanking all of you joining us today and helping the community to grow, and happy trading. All right. So thank you. Thank you. I hope nobody lost confidence about the strategy, because I am sure that when we get through this, when the market actually going back up, we learn a lot through this experience. And guess what? We will be more prepared and nothing can stop us by then. And then we could continue to make more money. As I said earlier, the whole strategy is about managing your margin. If we can actually improve the whole system and manage the margin well, then this is a very, very good long game. So thank you very much this evening for attending the tutorial. And the question about will the recording be available? Yes, just like any other tutorial, we will have the recording put on the portal. All right. So have a good night, everyone. Happy trading. Bye.